One of the goals of most family forest owners is to keep the land both in the family and intact and in forest. And to do that, it requires both the right people being involved, right family members who want to own the land and who want to pass it on to the next generation. And it requires a large degree of financial planning, because you have a large asset in land that doesn't necessarily produce a lot of money, at least on regular cycles. And so it's going to take some planning to make sure that your wishes and desires in keeping that forest land in the family and intact actually comes to fruition. Forest landowners are different in a couple of significant aspects. First, they're different in that they are not just passing down money that can be divided up among different siblings or different family members. They're passing down a large asset that they want to keep whole and keep intact, and that some family members may want to be part of and some family members may not want to be a part of. The other aspect that's different for landowners is that they have this large asset that they're transferring that's going to require finances and money to upkeep over the years and for the next generation. And so additional planning into how that happens and how it becomes affordable for the next generation is important. The first substantive ways that CPAs can help just make sure that the financial aspects of the plan are reasonable and are in place. So like I've said before, you're going to pass down a large asset and you want to make sure it stays intact and stays in forest land. So you're going to make sure that there's enough other assets to take care of that. There's enough liquidity, enough cash in the estate and being passed down in whatever vehicle you're using to make sure that the land can be maintained and taken care of. And that other beneficiaries who aren't going to receive a piece of the land maybe as well are taken care of. And so a CPA can help plan to make sure that the finances are there to do that, or arrange the finances so that they're able to do that. The other way is a CPA can help make sure that costs don't eat into the estate down the road, to make sure that income and estate taxes are minimized as much as possible and other costs of administration are minimized. Well, the most important thing a landowner can do is just get the facts to the CPA. And what I mean by that is making sure that they bring to the CPA a list of all of their assets and all of their liabilities, all of their sources of income, and all their typical expenses. So the CPA gets the full picture of what their balance sheet and income statement and what their net worth really looks like. And from that, the CPA can start asking questions that need to be answered, and can start advising them on how those assets should be arranged to make sure that their legacy actually comes to being. There's really three tax advantages, and the first two are federal tax advantages. You get an income tax deduction when you make a conservation easement. So the result of the conservation easement is that the value of your land is reduced because you can't use the land you can't develop the land, you can't use it in every way. So its uses are restricted. So you start with a value here, and as a result of the easement, the value is reduced down. Well, that incremental difference is a charitable contribution to the entity in which takes the easement. And that charitable contribution is deducted against your income in the year in which the easement's made. So that reduces your income taxes. It also leaves the land in your estate when you pass away less valuable, again, because it's been restricted in its use. And so that will reduce any federal income tax, federal estate tax, that may be owed on your estate. And in addition to those tax benefits, the state of Virginia provides a tax credit for the value of the conservation easement when it's made as well. Well, forest landowners should keep all records relating to any income they receive from the land, selling timber or other natural resources on the land, or farming on the land, whatever the case may be. They should keep records of all expenses paid related to the land, maintaining it, building roads, access roads on it, building fences on it, those types of things. Cultivating and managing the forest as well. And one important record they should keep is the purchase contract for buying the land and the records related to their purchase of the land for a couple reasons. The primary reason being that if they want to sell timber in the future off the land, they're going to have to know what the cost of that timber was. And a portion of the cost of that timber, the cost of that timber is part of the purchase price for the land. So in order to figure out what the cost was, to figure out what your taxable gain is, you have to go back to those documents and allocate the cost between the land and the timber. And the starting place is the packet of information that you got at closing when you bought the land, along with any forestry reports you had done at the time, allocating cost to timber, or any kind of appraisal you had specifically done on the timber on the land.